Unsecured personal loans can provide the extra cash you need to pay for many different expenses. But loan amounts, interest rates, loan terms and fees can vary significantly between lenders, so do your homework before taking out this kind of loan. To help you decide, we've rounded up our top picks for the best unsecured personal loans with features such as competitive interest rates, fees, and the ability to pre-qualify. Unlike some other types of loan products, such as mortgages and car loans, where your property may be used to secure the loan, unsecured personal loans don't require collateral. If you're approved, you'll get a lump sum of money you can use to pay for almost anything. And if the loan has a fixed interest rate, you must repay the amount you borrow, with interest, in fixed monthly installments over the life of the loan. Unsecured personal loans typically have higher interest rates than secured loans, so it's a good idea to shop around and compare loan offers. We've rounded up our top picks for the best unsecured personal loans to help you find one that might be right for you. Number 1. Marcus. Best for debt consolidation. Why Marcus stands out? When you get a personal loan from Marcus, the lender will, upon request, send your debt payments directly to your credit card, retail card, or personal loan accounts. This can make it easy for you to avoid the temptation of using the loan proceeds for something other than paying off debt. Competitive interest rates. Marcus offers competitive interest rates, and when you enroll in AutoPay, you can receive an APR reduction of 0.25%. But the company reserves its lowest interest rates for its most credit-worthy customers. Loan terms range between 36 and 72 months. If you're planning on a term on the longer end, you can expect higher rates. Fees. Marcus doesn't charge origination, late or prepayment fees on its loans, but late payments can negatively affect your credit history, so make sure to pay your bill on time every month. Ability to pre-qualify. Marcus allows you to check your estimated rate and loan term without affecting your credit scores. But note that if you submit a formal loan application and are approved for a loan, your actual rate and term may be different from what you see during pre-qualification. On-time payment reward. If you make 12 consecutive on-time payments, you can defer a payment for 1 month, and your loan won't accrue interest during the deferral period. Number 2. Wells Fargo. Best for large loan amounts. Why Wells Fargo stands out? Many personal loan lenders cap loan amounts at $50,000 or less, but loans from Wells Fargo are available in amounts of $3,000 to $100,000 with repayment terms of 12 to 84 months. Competitive interest rates. Wells Fargo offers rates in line with what many banks charge, along with a 0.25% relationship discount for customers who have a qualifying Wells Fargo checking account. Fees. The bank doesn't charge an origination fee to set up the loan, and you can pay your loan off at any time without a prepayment penalty. But Wells Fargo may charge late and return payment fees. Ability to apply for pre-qualification. Before submitting a formal loan application with the bank, you can see your estimated rate and loan term without affecting your credit scores. But if you apply and receive a loan offer, your rate and term may be different from what you pre-qualified for. Must be an existing customer. Only existing Wells Fargo customers can apply for personal loans. So if you're not already a customer, you'll need to become one to be considered for a personal loan. Number 3. U.S. Bank. Best for small loan amounts. Why U.S. Bank stands out? Some lenders have a minimum loan amount as high as $5,000. But at U.S. Bank, you can get a personal loan for as little as $1,000, so you don't have to borrow more than you need. Competitive rates. U.S. Bank offers competitive rates on its personal loans. Plus, the bank offers a 0.5% AutoPay discount when your loan payments come from a U.S. Bank checking or savings account. Can apply for pre-qualification. There's no way to check your estimated rate and loan term without submitting a formal loan application, which may affect your credit scores. Good credit encouraged. U.S. Bank says their personal loans may be a good fit for those with a FICO score of 660 or above. Number 4. Lightstream. Best for potentially fast funding. Why Lightstream stands out? If you're approved for a loan with Lightstream, you may, depending on your bank, be able to get your loan proceeds the same day. Low rates. Lightstream has some of the lowest rates available for eligible customers, and the company says it'll beat competitor rates if certain criteria are met. But you'll likely need a strong credit profile to qualify for a personal loan from Lightstream. Fees. Lightstream doesn't charge origination or application fees on its loans, and you won't be charged a prepayment penalty if you repay your loan early. No option to pre-qualify. You can apply for pre-qualification to see your estimated rate and loan term with Lightstream, so you must submit a formal loan application, which may lower your credit scores by a few points to find out your terms. Borrow up to $100,000. Lightstream has a maximum loan amount of $100,000 with repayment terms of 24 to 144 months. Number 5. SoFi. Best for perks. Why SoFi stands out? When you get a personal loan with SoFi, you get access to a variety of extra perks to help improve your financial health, including financial planning services, referral rewards and a rate discount on your next loan, and personalized career advice. Competitive rates. SoFi offers competitive rates and a 0.25% rate discount when you sign up for AutoPay. If you're approved for a loan, your rate will be determined based on information in your credit report, income, and other factors. Pre-qualification option. SoFi allows you to check your estimated rate and loan term before you submit an application without affecting your credit. If you decide to formally apply and are approved for a loan, your actual terms may differ from your pre-qualification. Co-applicants accepted. At SoFi, you can apply for a loan with a co-applicant. Applying with someone who has good credit may improve your chances of qualifying and could help you secure a lower rate. Fees. SoFi doesn't charge origination or late fees on its loans. And if you decide to repay your loan early, you won't be charged a prepayment penalty. Number 6. OnMain Financial. Best for bad credit. Why OnMain stands out? While some lenders only work with people who have good credit, OnMain Financial is willing to work with people who don't have great credit. According to the lender, in the second quarter of 2022, nearly half of OnMain's borrowers had a FICO score below 620. OnMain Financial offers many online financial education classes to help people get their finances back on track and improve their credit health. High interest rates. OnMain Financial's rates are higher than the rates of some of the other lenders on this list. Fees. OnMain Financial charges several fees, including an origination fee, a late fee, and in some states, an insufficient funds fee. But if you want to pay off your loan early, there's no prepayment penalty. Option to pre-qualify. You can check your estimated rate and loan term without affecting your credit scores. But if you apply and are approved, your final terms may be different. Potentially same-day funding. You may be able to get your loan proceeds the same day you apply if your application is approved by noon and you have a bank-issued debit card. What you should know about unsecured personal loans. Many different types of financial institutions, including banks, credit unions, online lenders, and peer-to-peer lenders offer unsecured personal loans. Make sure to shop around to find the best fit for your financial situation. No collateral? You don't need to provide collateral to get an unsecured personal loan. Credit plays a role. Lenders will factor in your credit when making loan decisions, and people with higher credit scores typically qualify for lower interest rates. Fixed interest rate and term. Many personal loans have a fixed rate and term, which means you make equal monthly payments over the life of the loan, so it's easy to budget. But keep in mind that interest rates may be higher on unsecured personal loans than other loan types, such as auto or home equity loans, where your property is used to secure the loan. Loan amounts and repayment terms. You can choose from a variety of loan amounts and repayment terms, but some lenders charge an origination fee to cover the cost of processing the loan, which can eat into your loan proceeds.